All right, we'll go ahead and do the daily review. I thought today was a kind of a good day, kind of a fun day. Notice the average true range is kind of in the area that I like it to be, kind of between like 4 and 6 for the ATR. And for my ATR, I use a 10 period average true range. So that's the average of the last 10 bars, the range. And for me, it's best when it's around 4 to 6 points. When it gets larger or when it gets less, it's kind of suboptimal from how I see it. Looking at the open, you had 2 bear bars down. It would have been reasonable to sell below that if it went below it, but it didn't. And you got this bull bar closing on its high. And when you get a reversal bar with a strong body on the open like this, and it's reasonable to try to go for a scalp. So if we're trying to go for 5-point scalps, this would have gone up 4 points. 4 points and a tick. So you wouldn't have gotten your 5 points here, but by the time it got up here, above this high, you're going to be moving your stop up. Maybe you put it just 1 tick above. Maybe you go ahead and get a point or 2. But I would not let yourself go into profit by more than 4 points, especially going above this high, and then letting yourself come all the way back down here and get stopped out down here. If you're scalping for 5 points and you have 4 points, then I would at least be break even by that point. Similar to this third bar, this fifth bar, this bear bar, it's not closing on its low, but it's still decent sized body. It's kind of on the edge. It's close for being a good sell. If this tail was any larger, I would say avoid it, but I think this is okay to take. What you're looking at here, double top and possible reversal back down to the moving average. So we're going for 5 points here. That got 4 points and 3 ticks. So 4.75 points. So like the first trade, you would probably get out of this with just a point or 2 or a few ticks because it didn't come all the way down and get your 5 points. So basically, once it's coming up and touching your limit order like that, then either I'll just move my stop basically right down to it. So, I either make 5 points or I make 4.5 points. So that's probably what I would have done in that case when it was basically coming right up to our 5 points right there with that tail. Double bottom here. Now, at this point, we've had 2 legs down after a gap up. So the day might be bullish, right? This might be an early low of the day, early double bottom, and then the bull market's going to trend up. So I liked the idea of trying to buy above this bar here. Now, after you get this bear bar, this follow through, I would just go ahead and get out below that. So this is definitely a case where I would manage the trade instead of letting my stop get hit here or down here. I'm expecting a breakout to happen right here and us to get 2 or 3 big bars up that just go ahead and get us out of the scalp. Then we get this reversal bar here, a lower high from these. Then I'd rather just take like a 2-point loss and just get out of the trade instead of risking it coming down and stopping us out somewhere down here. Market came down and it tested the close of yesterday. We can see all these attempts that it made here. There was a bit of a spike in volatility around 1040, 1035, but it cleared up pretty quickly. Notice the double bottom we have here. First low, and then a second low. And then this bear bar and this tail, it's higher than these lows here. Then you get a couple more bars with one of them closing above the moving average and closing near its high. So to me, looks like the bears are getting trapped down here, and they're going to be exiting above this bull bar. And so the scalp was fairly easy there. Would have gotten out within just a couple bars. A short I considered was this. I considered getting short here, but some of the things that are maybe wrong with it are we're coming up against this double bottom right here. So I would be considering shorting below this bar, but we're coming right into this double bottom. And recently, maybe the last month or so, we've had a lot of instances where there will be this bear trap like this, where the market looks like it's going to go down, and there's like a reasonable scalp trade that ends up failing. And there's been a lot of days with a short like that have failed. So for the reason that we'd be shorting right into this double bottom, and we've had a lot of these that fail lately, then I would rather avoid that. Also, the bull, I don't feel like the bulls are really so trapped here. This is a first entry long here, and then we have not had a second entry long yet at this point. And when you see the second entry long fail, that's when the bears will really hop in and the bulls exit, and that hadn't happened yet here. Two big bull bars. Oh, another thing that I want to talk about here, another reason to stay out of that trade, is it's coming, but this is potentially just a 50% pullback. So if you're thinking about shorting here, this is potentially just a test back of a 50% pullback of this leg up. And that might be all this is. And well, it turned out that that's what it was. It was just a deep pullback in what has been a trading range day so far. So if it is going to be a trading range, I'd rather not be selling so low down here in the range. Two big bull bars, probably going to be a second leg up from that. And we have a deep pullback, but that pullback stayed above the low. So the bulls are staying in their longs because they were not stopped out here. So by seeing that, then now we're starting to get above the moving average. I like the idea of buying above either this bar or this bar. Either of those are good buys there. And you notice your risk is going to be really small. You're only risking 2 points for this first bar. So you're risking 2 points to basically bet to get 5 points and try to get out around these highs. So I think that both of these are good longs there. A short I did want to mark is this. Now, clearly there was some sort of news happening here. The bars got a lot larger. So there was some news event, some sort of which led to this breakout. Now, ignoring that and just looking at the price action, what do we have here? Looking at this bar, multiple attempts by the bulls to go higher that are failing. We see all these tails on top of these bull bars. And then now we're even below the moving average. Now, here, this bar, it's a second entry short. So this is the low, pullback, first entry. And then second entry short is here. So you have a second entry short below the moving average, closing near its low. So I think that's a good short there. And, if my guess is that this was some news event. If it wasn't, it's possible that this was just bulls exiting their longs. That seems like a bit excessive of a move for that. But, bulls were buying through here. You could look at it as a head and shoulders bottom, left shoulder, head, right shoulder. And then they were, trying to buy in here just like we were, betting on higher prices, betting on a breakout of the day's high and higher. So it could have been just bulls exiting their longs, just giving up. That's what caused this. One more bar I have marked. It's getting a bit late in the day. I mean, this bar is at 345. But ignoring the time, I think the price action looks good for a buy above that. these big bear bars, bears were definitely shorting through here, selling this close down here. And then notice, so they sell that close, pull back, tail does not come back and touch that close. Second pullback, tail is higher now. It's even farther away from that close. Then we get, 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive bull bars in a row. Now we're above the moving average, and this bar is closing near its high. Bears that we're shorting here, they're going to be exiting. And it's clear that's what happened. We get this 3 strong bars up here. Now, this last bar here, I don't know. I mean, that's a 30-point bar. And that was probably news. So I'm not sure what was happening on this bar here. But it's no surprise to me that it came down near this close over here. Because all the bears that were short here, if they didn't get out here, it looks like, maybe the computers or the high frequency traders were selling strongly right here, trying to get it back down to this close so they could exit their positions before the end of the day. So, were these news events? I didn't double check. I'm not sure, but it could have been. The price action reads the same whether it was news or not. I can definitely see bears that were shorting here selling higher aggressively at the end of the day. Perhaps funds were just dumping thousands and thousands of contracts, betting that they could trap the longs here and then exit their shorts. And then another reason that makes sense is because if they were shorting through here to get it back down to this price, well, then they exited their shorts down here, which created this big tail on the bottom. So, was it news or was it just price action and, funds trying to trap each other? So this was a good day. I like when the average true range is kind of around 5 points or so. It's really an optimal volatility for going for 5 point scalps like this. So I was concerned with Trump being in that the volatility would be much higher. And we would have a lot more moves like this. And we will have more moves like this, but my concern was that every day was going to be this, this crazy volatility day, and it was going to be difficult to try to, find reasonable trades. But actually, since the inauguration day, since the January 20th, the days have actually been less volatile. Surprisingly, the ranges have actually been a little bit smaller than prior to that. So I mean that's good news. That's good to see. Even with all the tariff news, the moves haven't been so big, but there have been lots of bars at around 4 or 5 points, and then just a lot of easy scalps. All right, that's all I got. Tomorrow's Friday. I'll see you guys then.